Brace yourself, homeowners, because 2024 is serving up a bitter brew of rising homeowners insurance costs. That's right, buckle up for potential hikes between 10 to 15%. And if you're in an area prone to wildfires or severe storms, the increase might be even steeper. One Florida family even shared their monster 400% increase. So have you been feeling trapped between a rock and a hard place? In this video, we're going to be diving deep into why homeowners insurance is becoming so expensive, touching on everything from inflation to the rise in severe weather events. And what's more, we've even got some actionable tips lined up on how you can actually save money on your homeowner's insurance. So be sure to hit the subscribe button and ring that notification bell because we're about to get started. All right, so here's the first story. The one I mentioned earlier about the family receiving a 430% increase in their insurance premiums. Check this out.
The letter's opening line said, "Great news.
We've found an insurance company for you." What's the bad news?
The bad news, it's about 4.3 times what I was quoted for Citizens.
The premium for the same level of coverage from Slide was $14,684 compared to $3,403 from Citizens.
Do you think that's in any way a reasonable rate? $14,000.
No, not at all.
Bryant's home is at 35 feet of elevation, is more than a mile from the Hillsborough River, and is 3 miles from Tampa Bay. The new rate would raise Bryant's monthly payment by $940.
Why would anyone choose that unless you weren't catching your mail and you weren't paying attention to your mail?
Under the depopulation program, Slide would become Bryant's default choice unless he went online and filled out a form to opt out before November 6th. He did that, but he worries others may not take action in time.
But if you don't have a computer, if you're not computer savvy, and you're an older person living at home alone, I just worry about folks like that get stuck with these huge slide bills.
Yeah, I don't know, guys. This is definitely making me feel a little bit nervous about homeowners in general. Now, I've heard rumors that these insurance companies are losing, or maybe they've already lost money on all of the investments that they've made, often in commercial real estate or related funds. You see, these insurance companies are pretty much like banks and investment firms. They have a lot of cash, and so, of course, they wanted it to grow. They invested them in assets that are probably worth a lot less now. So now they're choosing to take it out on their clients, trying to squeeze out as much from each premium as they can. You know what I mean? So when your homeowner's insurance policy comes up for renewal in 2024, make sure you check it out closely. Also, be prepared for an unpleasant shock. You're likely going to be facing a premium increase of 10 to 15%, and the price jump could be even higher if you happen to live in an area where the risks of wildfires or extreme storms are greater. Now, this is assuming that you can even find homeowners insurance coverage at all. Data shows that premiums have been skyrocketing, jumping over 20% year over year. And so what this means is that the average homeowner who's already paying $1,700 in 2023 compared to $1,175 in 2019 can still expect another 10 to 15% bump this year. Ouch. Now, this is potentially another $100 to maybe $250 more, and possibly even higher than that for folks in the pricier areas. Now, the good news is that inflation on homeowners insurance costs is hopefully slowing down, but don't expect it to stop dead in its tracks. Why? Well, as explained by insurance firm Matic, insurance companies are still reeling from all of the natural disasters lately. So they're definitely passing on some of those costs to us. Think higher construction costs. Remember the whole pandemic craziness? And more frequent floods, fires, and tornadoes. They're hoping that things will get better in 2024, but I'm not really sure by how much, especially when you see headlines like this one. North Carolina homeowners brace for a potential 42% insurance hike in 2024. That's right, guys. In North Carolina, homeowners might be in for a wild ride with their insurance rates if the North Carolina Rate Bureau's request gains approval from the state in August 1st of 2024. Representing insurance companies in the state, the Rate Bureau is pushing for an average 42% increase in homeowners insurance premiums, with a special focus on coastal counties such as Carteret, Onslow, or Pender. That's where they're asking for almost 100% increases by the specified date. Now, as you guys can imagine, the Office of North Carolina Insurance Commissioner Mike Causey, he's received around 5,000 letters expressing frustration from the proposed rate hike, with some residents looking at a potential doubling of their insurance premiums. Everyone's basically saying the exact same thing in their letters, with people highlighting the financial challenges that they're currently facing: rising grocery costs, increased taxes, soaring rent, and stagnant incomes. Commissioner explained that the insurance company's request is probably due to factors like inflation and the impact of extreme weather events. But hey, wait a minute, don't those insurance clients have to face this as well? It reminds me of a story from a friend of mine who's living in California. He has Allstate auto insurance, and at the end of December, his Allstate rep sent him an email telling him that his insurance was going to increase. The rep went on to say how much their competitors were increasing their rates, but failed to include the Allstate increase in the email. That's why he had to reply to the email asking, well, how much of an increase could they expect? They told him that since his insurance was paid up through the end of April, they wouldn't have the numbers until the end of March. And this is where it gets a little bit funny. That his continued loyalty would be appreciated and to please consider working with them before looking at other insurance options. I mean, how precious is that, right guys? Now, as you can see, this proposed rate hike isn't just a North Carolina issue. It's a wake-up call for insurance customers across the country. We need to understand what's driving up these increases and what we can do to protect ourselves. So hit the like button and stick around for the rest of this video because we're going to dive deeper into the factors behind the rising insurance costs, and we're going to offer some practical tips on how to save money on your homeowner's insurance. And remember, knowledge is power, guys, so hit the subscribe button and tap the notification bell for financial breakdowns and analysis like this one. So why has the cost of insurance soared? Well, the primary culprit is the surge in claims over the past few years, surpassing the predictions of actuaries. In the previous year alone, we saw 28 individual weather and climate events causing at least $1 billion in damages. Definitely a notable increase from the 22 events in 2020, according to government data. But it's not just natural disasters that are driving up these costs. Supply chain disruptions and labor shortages are also playing their part, elevating the expenses associated with home repairs and replacements. Insurance agents are also quick to point out other issues like fraud, excessive claims, and legal system abuse as contributing factors. So buckle up for another round of premium hikes in 2024, I guess. Fingers crossed that they won't be as brutal as last year, but let's be honest, guys, the outlook really isn't all that positive. Now, the good news, inflation's finally showing signs of cooling down, and hopefully that means that their repair costs and replacement prices will follow suit. Plus, after multiple rate hikes in just the last couple of years, insurance have, to some extent, corrected their pricing issues. However, it's very important to note that insurance prices tend to catch up with inflation with a lag. Companies have to jump through hoops of state regulations before they can jack up your rates, and even then, it can take months for the new price tag to hit your doorstep. So depending upon who your insurer is and your zip code, you might have already experienced a significant premium increase, or one could be on the horizon this year. It's no wonder why people don't really believe the 3% inflation rate news, you know? On a day-to-day basis, prices feel like, triple that number that they're claiming, and that includes real estate and homeowners insurance. Basically, everything feels just way overpriced for most Americans. I guess my advice would be, as much as possible, don't overpay for anything. Negotiate prices as much as you can. You'd be surprised how flexible insurance companies can be as long as they can keep you as a client. Not only have homeowners insurance policies become pricier in recent years, but finding them has also become a challenge for customers. Take California, for example. Wildfires have been scorching the Golden State since 2017, which has led some insurers to discontinue or even limit their homeowners insurance offerings last year. And those very same insurance companies that halted new policies are now facing significant rate hikes on those that they're renewing. Case in point, California's largest insurer, State Farm, which stopped new business in 2023, recently got approval for a sizable 20% premium increase for renewals effective in March. Allstate, with a pause on new policies, they have requested a 39.6% rate increase, currently under review by California Department of Insurance. In Florida, where hurricanes pose the primary risk, the insurance market's even less competitive than California's. Home insurance premiums in Florida surged by an average 35% at renewal from May 2022 to May 2023. The situation is just plain dire at this point for many Florida homeowners, lacking access to major nationwide insurers that are usually the ones that have more stability and are rated higher. The problem worsened in 2023 with Farmers discontinuing its own branded home insurance in Florida, affecting 100,000 policies. States like Georgia, South Carolina, New Jersey, New York, and Arizona, they're also experiencing a reduction in insurance options, limiting choices for new customers. What this means is that someone who had 6 home insurance options in 2022 might now only have maybe 2 or 3. Experts say that availability should improve later in 2024 as those hefty rate hikes start rolling in, but it's unlikely to return to the normal levels that we saw back in 2020. This lack of options is a source of frustration for homeowners, particularly in disaster-prone states. The usual advice is to compare quotes from as many companies as possible in order to explore potential savings with a competitor. But in states that are prone to disaster, those options may be be very limited, not to mention very expensive. And let's face it, guys, homeowners insurance premiums can feel like a punch in the gut these days. So here are some clever ways to trim that bill without skimping on the important stuff. Discovering ways to save on your homeowners insurance? Here are 5 strategies to consider. Number 1, raise your deductible. Boosting your homeowners insurance deductible, the amount that you pay when making a claim, this is a quick method to trim your premium. Doing so, you'll keep more money in your pocket monthly that would otherwise go to your insurer. But choose wisely. Make sure you have enough saved to cover that bigger out-of-pocket expense if trouble strikes. So number 2, enhance home security. Even basic security upgrades can earn you discounts that you wouldn't believe. Smoke detectors, burglar alarms, deadbolts, cameras, these simple upgrades could slash 5% off your bill. And if you go full-on sprinkler system and monitored alarm, you'd be looking at possibly 15 to 20% in savings. Number 3, explore lesser-known discounts. Uncover hidden savings by inquiring about lesser-known discounts. Some insurers offer additional homeowners insurance discounts if you don't have smokers at home, recently purchased your home, pay your premium through automatic bank payments, choose paperless billing, or work in specific professions like teaching, engineering, or firefighting. 4, consider home improvements. Home improvements might make you eligible for insurance discounts. Features like storm shutters and impact-resistant roofing can toughen your home against damage, meaning potential savings for your insurer and for yourself. Upgrading outdated plumbing and electrical systems could also qualify you for a discount. Just request a home re-inspection. You might be surprised as to how much those improvements can shave off your bill and improve your home. And step number 5, improve your credit score. Surprisingly, your credit score can have a significant impact on your homeowner's insurance premiums. Insurers often use a credit-based insurance score to determine rates. So if your credit score is low, you might pay higher rates. Just remember, a good credit score can save you a whopping 94% compared to someone with poor credit. You can improve your score by doing little things like paying your bills on time, reducing credit card balances, and even addressing errors on your credit report. I know it's tempting to ditch coverage to save money, but trust me, that's not a good idea. When disaster strikes, you'll be left holding the bag, and it might be empty. Instead, explore options like private flood insurance. You might find a cheaper policy without leaving yourself exposed. Remember, while looking for savings wherever you can is a must, avoid cutting coverage you may need. Dropping unnecessary policies like, say, flood insurance can leave you financially vulnerable in the event of a disaster. Remember, instead, explore options like private flood insurance. You might find a cheaper policy without leaving yourself exposed. Yeah, I know homeowners insurance can be frustrating, confusing, and downright expensive. But here's the thing, guys. We don't have to be victims. By educating ourselves, advocating for fair rates, and supporting each other, we can become empowered homeowners to refuse to be bullied by insurance industries. So let's keep the conversation going, share our experiences, and fight for the financial security we deserve. Our comment section is wide open for you guys. Oh, and don't forget to hit the subscribe button and show your support for our financial freedom family here on YouTube. I'll see you guys on the next one. Y'all take care.